Alright, I'm gonna rock and roll. Gold, man. Gold. Holy mackerel. My God. Where's my messages? I gotta show you guys my messages to my friend, man. I told him yesterday, I said, man, you gotta get into gold. I was like, right over here. I did a whole, like, synopsis for him. I gave him the whole breakdown, targets and everything. You know? He's a financial advisor at what is it? Bank of America. So, but gold, man, let's go. Big on gold right now. Big on gold. Can you trade gold 200x on Bing X with USD? I don't know. I have to look that up. But I tried looking it up on because I was on KuCoin. I got to get off KuCoin though, right? Because they're doing that KYC stuff. But so, look, let me know what you guys want to look at first. Essentially, I'm really looking at the Dow today. Dow, dollar, gold, Bitcoin, really. For the Dow in the long term, all right, we want to see a close around 34,720. All right, so I got that marked off here in white. See if we can get up there, close above here for the day. All right, I'm gonna take you guys through. Oh, you can on Bing X. Damn. All right, well I don't have much of an entry. Damn. All right, next time. All right. So, just to start off, all right, I follow this guy's cycle. All right, it's a 609.6 year cycle. All right. In essence, we go through these phases, right? And we are currently in the last phase of the cycle. This is a great paper. His name is Martin Armstrong. All right, I'll put his link in the chat. Armstrong Economics. I'll get it for you right now. Bangarang. All right, so you just Google, right? You can go to Armstrong Economics. Armstrong Economics. He's banging. I highly recommend him. All right. So let me give you guys the link so you can check him out. Use oil stocks and commodities 200 USD. That's where I went from. All right, I will. So Bing X. All right, I'll sign up. Here's his website. All right, he's awesome. All right, I actually subscribe to his his private blog and stuff like that. This guy has it down, man. This guy has it down. All right, he's got a lot of good things in his private blog. Check it out. All right. Nonetheless, looking at the Dow, 34,720 is the close that we want, and in essence, all right, we want to look back to. Is my indicators not working? All right. Look back to like the 6 month because that's what we're closing today. We're closing the 6 months, so let's just start on that bad boy. All right, I got his waves marked out here on the Dow. All right, this cycle, believe it or not, started over here in January, right around where's COVID? Here it is, January 20th. All right, that was the beginning of this cycle. All right, the last cycle started over here on January 11th, and another cycle started over here on the 2nd. So each one of these is 8.6 year cycles, all right, where each one has individual waves in it. So I know it can be a little bit hard to see, but we are in the 6th wave of a 309.6 year cycle, right, in the larger thing. Now, inside of that 6th wave, there's another set of waves, all right, where this wave is the 5th wave, okay, and there's going to be a 6th, I think that starts where? Here, on the 28th, on the 28th, the year 2028. All right. Now that doesn't mean that the peak is going to be in January of 33. All right. We have a peak here in 2024. It's very likely that we see something like this where we get a leg like this, right? A second leg, the big leg over here in like 2024, 2025, right? The big leg here, the midpoint, and then the start of the next cycle could be something like this, where you get this topping structure in the Dow Jones. All right, that's kind of like what we're looking for from his model. All right. Nonetheless, all right, we crossed the midpoint of his economic cycle right here, January 2022. It was September though. All right, if you go over like the monthly, all right, in September or March 2022. All right, so we're halfway through the midpoint and the peak. All right, so we're looking for a peak over up in here, in between these midpoints. All right, so something like that, yeah, something like right around in here. All right, and so I did a whole video on the 369 EMA. All right, so just go over to Bitcoin. Let's see where we're at. All right, in the grand scheme of things, I use that EMA because I mean, look at this. Look at the daily on the 9-day. It went right to it. That's my gold. That's my gold EMA. So in essence, we don't want to break this to the downside. Otherwise, we're going to see lower prices. All right, because there's a gap over here that they could want to fill. All right, with volume, but price did not come there exactly. It came just below this high volume node here, wicked down, hit some stops, and then carried on. So, we're good. We're good on Bitcoin until about 16,928, in my opinion, with the strategy that I use. All right, the 6-day we got 21,296. All right, and on the 3-day we're at it right now. I think, yeah. So on the 3-day, might be looking for a bounce around 26.7, but there's other things to be considering on those time frames. And on the daily, 26,311. All right, for that EMA though, I mean, it's already kind of crossed the 3-day and gotten a real nice bounce. So it looks like they filled up their longs. I'm looking for 36,000, to be honest with you. To be completely honest with you. So, one thing we do know is that they like to fill up their longs below the VWAP and their shorts above the VWAP. All right, so this thing should have a VWAP on here. I don't know if it's working or not. Yeah, I don't see a VWAP. But let's just pull price action over to where this range is and see where the VWAPs are at and see where they might want to fill up their longs. So look at the low volume here. Right in this low volume gap was the stop out. All right, so that's good. We want to see them come up into here now from like this fall. So there's a lot of low volume up here at like 33, right? But you can see like how they come above the volume and start stopping people out. And so you got 1, 2 hits to the upside on this low volume here. All right. So I would be looking for, the golden ratio. We haven't hit 0.5 of the range of this particular range. From the top, from the absolute tippy top, let's see the 0.5, where that lies. 0.5 of the range is way up in here. All right, so 42 is a target. In between the 0.5 and the 382 is another target. All right, so like 39. So, I'm doing like 30, 31, 33, 39, and then looking for shorts in between. That's kind of like my deal. All right. Yeah. That's bitter coins. Let's go to gold, man. Gold. I love gold. Where's my gold chart? Gold, man. Let's go to the big chart. So let's go to the 6 month and see where we're at. Look at this. This is so gorgeous. All right. So had a nice bottom here, 2016. It's beautiful. All right. So ain't no one getting anything below $1,000 on gold. All right. On the monthly, I don't expect to hit the 369 on the monthly. I really don't. Where was the last time you hit the 369 on the monthly? You hit it back here in 99. All right, that was your fill up zone. This thing is gone. All right. So if you're looking for an entry on gold, you might go to the weekly. All right, but you can see that was a fill up zone, a nice accumulation zone for gold on the weekly on the 369. You never came back to it. Look, they fill up their longs there. But on the weekly, you got a nice bounce at the 200. All right, so this, in essence, is my W formation, all right, where I would kind of expect things to go. So, you get usually like one hit here, right? Another hit here, 2. You got a nice W formation forming at the highs here, right? So you got a third hit, right? You're going to get rejected. I would expect it to come down. All right. Right now you're at the 50 EMA. All right. Could it come down like to there? I don't think so, because they already stop hunted it. It's already been done. All right. So I would expect a bounce from here to continue higher for gold, and targets on gold from this huge cup, right? Just taking it from that, from all of there. You can go from maybe here, right? Something like this. So you got 2936 or 2800, right? 2800, 5000, and 9000, and then 13,943 would be the ultimate goal. So I'm going to be taking profits on gold here, and then seeing where the rest goes into 2033. All right. But for my positions today, all right, I got into a Bitcoin short, but I'm trying to ladder in some longs on XRP. I'm laddering in longs on XRP because I think that the SEC filing case is going to end on July 18th. All right, July 18th is a big day for XRP. All right, so I'll take you through real quick because I did a video on this, but I don't want to go through everything like that. If you go back to the channel, I did a whole video on XRP and why I think that is, right? Why July 18th is a big day. Basically, it's 314 bars on the 3-day from when the SEC filing case went down. All right. So the only thing that concerns me about XRPizzle here is you got a lot of momentum on the top here. All right. So I tried to January 1st, 2020 was when the cycle began. All right. So I look for the momentum. So you got a nice anchor here in the momentum, right? And so I want to see momentum keep coming up, right, on the weekly. All right. You had your nice trigger wave. I'm kind of hoping for it just to keep coming down. Maybe you come down to like here. I don't know. But it's a little bit sketch AF. But Bitcoin looks sexy on the 36-day. It looks really, really sexy. So 69-day, you got a nice trigger wave here on the 69-day. That confirms on July 23rd. On July 27th. Oddly enough, that date correlates with this right here. Let's see. So on July 27th marks a minor cycle that is expected until November 7th, 2024. All right. Where we're going to get a short reset and significant changes in the global financial system. Now, November 4th on 2023 date marks the end of a 51.6-year cycle that began in 1971 with the end of the Bretton Woods system. And Armstrong has predicted that this date will be a significant turning point in the global financial system. Look, this guy, he uses these dates, right, based on like prior bull markets. And so he goes and he dates things back to like before, look, 175 years, right? AD, right? And each bull market is 306.9 years, right? 306? Yeah, 309.6. All right. And so this current cycle we're in started in 1723. But the Dow Jones and our markets, we don't have data from there, right? He has a whole system for doing things. However, I just kind of follow the current wave that we're in. So each one of these is 51.6 years, all right? And inside of the 51.6 years, right, there's 8.6-year cycles. And inside of those 8.6-year cycles, there's 1, 2, 3, 4, 5 waves. So in this particular one, right, you got 51.6, right? And in these 8.6-year cycles, starting in 2020, the midpoint was 2022. A peak should be forming in 2024 with a midpoint in 2026. All right. However, this wave right here, the very last wave, I don't think it's bullish. I think this is the peak of the market in general. The absolute peak before it either goes sideways. It doesn't have to go down. And I think that the bears make that mistake because they all look at the Dow Jones and they look at this. And I want to explain this because this is very, 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 very important. All right, in my opinion. They all look at the Dow and they all are expecting this big drop, all right, to happen at the end of this cycle, of the big cycle, all right? This doesn't need to happen, all right? This doesn't need to happen because, one, it's in the 1930s, and in the grand scheme of things, the 1930s was only the fourth wave, right? So it's a new asset class. The U.S. market, the Dow, this is new, all right? This is going to have, it's a transition phase into the next cycle. Now, however that transitions, all right, when this goes down, there's a big difference here, all right? I'm losing viewers. Where'd you go? All right, there's a big difference here, all right? In the Great Depression, it was a flight to safety, okay? Here, which would be the dollar, all right? Here, you don't have a flight to safety, all right? You have a flight to quality, all right? Because the dollar, and we'll look at that real quick before we get out of here, all right? The dollar is being weaponized, all right? The dollar can be printed. Back in the 1930s, we were on the gold standard. Like you actually used gold in the 1930s, all right? They were using gold, right? And then it crashed, and then they changed the monetary system, and they said, we're going to collect some gold, and we're going to give you dollars, and we'll give you gold back in exchange for those dollars. And then they changed that in the 70s, okay? And so you had two monetary policy changes that kind of create these our bull markets in a way. However, this was a flight to safety because gold was being used, all right? And then when it crashed, they created their fiat, system or whatever. So this time around, what is safe to be in? And I think that's the big question that people are trying to figure out is like, well, if I'm in stocks and they crash, I can't go into dollars because they constantly devalue the dollar by printing it, and that's a major issue, right? And if inflation is an issue, maybe you want gold, but gold is also volatile, and gold crashes with everything else, right? The price of gold goes down when markets go down, all right? So, in essence, what do you do, all right? But there is a war. In times of war, people don't know what fiat currency to go into, okay? So in times of war, are we going to go into dollars? What if the U.S. loses? What if the U.S. defaults on its debt, right? And so we have a sovereign debt crisis that's going down in markets, all right? And I think that this guy, he's got this huge artificial intelligence database, and he's saying that, the bonds for these government treasury bonds that people hold, a lot of people are going to default on their debt, and these bonds are going to go to zero. They think they're safe because they're governments, but that's not true. All right. In war, we don't know if the U.S. loses the war and defaults on its debt, right? Then its government bonds are worthless and its fiat currency is worthless. That's a big risk. Do I want to be in a government bond who's going to war with another one? Which government bond do I want to hold? Do I want to hold China bonds, Germany bonds? Do I want to hold yen? Do I want to hold Swiss franc? What's stable? But they all the fiat currencies print and mess with their monetary system, so they fluctuate. And in time of war, right, where you get this transition, honestly, that's why I said gold. Gold is the hedge against everybody because gold is neutral. All right, gold is is of the world. All right, so I think gold is going to be good, right? And I think like large cap stocks are going to be good. Now, Bitcoin is a risk. The reason why Bitcoin is a risk is because, and this is why Bitcoin could actually see lower prices, and I've been trying to tell people in the Discord this, is that Bitcoin is power is necessary for Bitcoin to function. All right. Now, whatever your timeline is on Bitcoin here, okay? Now, you bought in back, in 2015. This thing, it could go to zero. You don't know, right? But you've probably made money and taken profits and done those things. But if you're us, all right, or whoever, and you're in here, right, around 20K, right, you got to be okay with Bitcoin going down to 2K, 10K, 8K, right? During time of war, all right? During a time of war, let's say you got time of war, right? So we're here right now, all right? We're bullish. We got the halving in 2024, what have you, right? But we know that to be kind of the peak market, right? So maybe Bitcoin does come up, right? Maybe it goes to 100K. Who knows? Let's say the good scenario. But then they announce war in the fall. Well, war is bad for Bitcoin. Why? Because EMPs, the power gets shut down, and these miners are all over the world who now have an alliance. Did someone say bullish? Yo, bullish, right? You got miners all over the world. They could come for these miners. So you got war. You got countries messing with other countries' power sources, right? And you got them able to take out the miners. What's up? So you could come right from 100K, bang, down to 2K. Who knows? One, because they could take out exchanges during these times or whatever. So look, in the grand global economical scheme of things, Bitcoin is like is a big risk. All right. Now these guys have a lot of money. You know how much money is in government bonds? I don't know. Let's see. How much money is in global government bonds? And I'm not saying all of them will default, right? But surely the US, 133 trillion. So cut that down, right? To like, let's say 900 trillion. So $900 trillion, all right, of bonds that is going to need to be reallocated to stocks, okay, to gold, okay, and to possibly Bitcoin. Bitcoin gets even 1% of that money. That's a good thing, right? That could drive it up to 100K, just that reallocation, because people don't think that that's coming, but it's coming. Governments are going to default on their debts. Their bonds are going to go to zero, and people that are invested in these bonds are going to be rug pulled. Do I know that? No, but that's my opinion. I'm giving my opinion. All right. Now, all that money is going to be, when that crash happens, going to flow out into the markets, and the markets will boom. And maybe that is the sixth wave, where we get a huge move in the stock market, right? And that means dollar would be going down. Dollar would go down. Dow Jones, equity markets will go up. All right. Things like Apple, oil should be skyrocketing, right? Silver, all right. Large cap stocks should boom in the 2030s. They say that war is good for stuff, right? It's going to be very, very volatile. Volatility is in essence. So looking at dollar here, all right? So we know the cycle started over here somewhere January 1st, okay? So since then, you've had a nice run up in dollar, all right? This is selling dollars, This is inflation, but they're out of dollar, all right? Dollar, I'm expecting to come down. I'm expecting a retrace on dollar to some extent. But since the beginning of the cycle, all right, just using that, 0.5 sits right around here. So I'm looking for 0.5. Where are you, 0.5? I got way too much going on my charts. There it is, 0.5. So since the beginning, you're above the 0.5. Eek. Right? Eek. So you want to see a break of 101.93, all right, for dollar to keep coming down and things against the dollar to come back up. Could you come up to the golden pocket up here? 104? Probably. Right? Why not? Anything is possible. But when I look at this, right, this is reversal volume. Green and purple. Right? Just like this is reversal volume over here. Green, red, reversal. Green, purple, reversal on the 6-month chart. All right? That's in essence, how the colors work on these bad boys. All right. We sold off dollars and we're slowly buying them back in a way. Right. So here's like your range in essence. Like the blue is where I would say the range would start on the 6-month time frame. Somewhere in there, you got the point of control in there probably. Should have it. Yeah, there should be a red line. So, you got your point of control here on dollar. All right. For believers. All right. And you got your golden pocket. So I would be looking somewhere in here. All right. And you got a wick. But that could be a blow off top. I know that sounds crazy. You need your value area high. So you got that zone right there. All right. And then half of the wick. Let's measure it out. Somewhere up in here. 109. So I would... 108 is a very, very big level for dollar. Very, very big level. So those are my levels on dollar. Right? I could see it come down and up. But, here's like your top of your dollar. Levels to watch. All right? And then, and honestly, I think the dollar collapses after the war, and it's no longer a thing. And they're going to have something new. Some IMF nonsense. All right? Ruble is down today. Good old Russia. All right? So, but this is a nice wick. Right? That's a stopping volume candle. I would expect, if you are a fan of Russia, and they are projected to win this war, right? You would want to see ruble right around here. So, if you like currency and you want to pick some rubles up, this would be a good buy. So this could be your first leg of a W formation, all right? So during the war, you're probably going to see something that kind of ends up looking like this, right? Where you're going to get your first leg, come back up, form a second leg up into here, right? Let's say this would be here. Where are you coming? End, W, probably somewhere in here, right? And then come back down, 2024, 2025, somewhere like in here. And then like shift out. Right? There's a lot of vectors up here. They always come back. All right? Right there, 4 cents to your dollars that you purchase. So, that's a pretty good return. 400% on ruble. I like ruble. I do. I think ruble is a good currency in the moment. Bonds. Look at this. I would expect, I don't know if this is what kind of bonds these are, right? It looks like it wants to hold here, right? Stopping volume candle on the 6 month. So this is a holding zone, all right? 0.5 is where we're looking for on the bonds. We'll see what happens at that level, all right? We're looking here on the Vanguard bonds, all right? So today is a big day. Today we're looking for 3,400, 720 on the Dow. That's what we want to see. We want to see 3,400 and 720 on the Dow. We want it to make a new 6 month high. What happens after that? It can get a pullback, but that would mean higher prices going into 2024. So if you can close above 34,720 today, whatever happens from there, I would expect that peak that we're looking for, over here in April of 2024 to occur. So you could close up in here, will matter. Close up 720, let's see, 720, somewhere around there, and get a pullback, get everyone bearish, what have you. It doesn't matter what happens in here. All right, here's your 19 day. So maybe you come back down, here's a golden pocket here. It doesn't matter. The wicks, I don't know. But you would want to see something like this. All right, on the Dow. That's what we're hoping for. Something in there. All right. In essence, when you look at the beginning of the cycle, this is the beginning, and it's a transition phase. So when you really look at it, you got a nice, odd-looking W, right? Odd-looking W. Rise, level 1, retrace, right? Rise. You can form another W, right? Something like that. You could even come down lower. You could come down into here. It doesn't matter, right? Whatever happens, happens. But in essence, we wouldn't want to see this low break, but if it does, we don't want to see that low break. What's between them? The golden pocket. Golden pocket, shift out for a nice peak formation somewhere up in here. Going into 2026, where we kind of expect the decline to happen in this region in 2024, 2025, the major decline. That's what I'm looking for equities. Or, and again, not even a major decline. Okay, not even a major decline. All right, this COVID wick is a big wick. The Dow doesn't need to see anything lower than, I mean, that's mass panic. It's pandemic, war, 2 crises. Let the crisis wick hold. There's a crisis wick. Let it hold. Okay, let that wick hold. All right, and so 18-day. I use my 369 to gauge things. All right, 18-day 369. Bang, right there. Where's that at here? For the beginning or the end of a cycle. I mean, this thing could chop around in here this entire time till 2036. It doesn't matter. You know, it's not like you're going to get a huge crash, right? Everyone's thinking that it's going to come back down to the dot-com bubble, right? Over here and here. I did too. It doesn't need to do that. All right? The 36-day. Look, I don't expect anything below the 369. I really don't. Nothing below here. And with time, this will move up. All right? So, right now, you're just going to hit the highs over here. You probably won't even, you'll never break this low that was made in the dot-com bubble. Everyone thinks it's got to come down into this imbalance here. It doesn't. Okay? Looking at S&P, same deal, S&P. All right? What do we got here? So, S&P, here's a 369 here. Could you come down to there? 1466? Probably not, right? But 2032, 1903, right? Hit the highs over here, 16. That would be fine. Interestingly enough, from this point to this point, you're just holding the 0.5. They take profits at the 0.5. Look, big take profit zone here around the golden pocket. You haven't gotten back above your 0.5. I would like to see this hit the 382 and come back up for some kind of crazy, awesome blow off top in the S&P. That would be dope. Imagine a 26,000 S&P. All right, that would be crazy, right? Somewhere up in here, right? If you get rejected off of this around the peak, right? Because remember your peak is coming in around, let's see, 2025, right? If you get rejected from here, I would expect it to come back down and at least go to, probably this level, or hold the 369. You'd want to hold the 369, right? In essence, that's the target for me, right? You almost never touch it. You almost never touch it. The last time you touched it was the Great Depression. So the beginning of a cycle, maybe you touch it at the end. Right now it sits at 1419, and you got another couple years for this thing to move up, where you can bounce off these highs. Maybe you get a little wick below between my 639, so maybe the next one begins in here, because this one did wick below. You got little wicks below, but it doesn't need to do that. All right, nothing needs to happen. All right, 3 month. There's a nice target, right? 943, probably not. Let's go. So this is, you can think of it like this: the monthly, right? You started it here. The 2 month. Started it at the, okay, so like there's your 2 month. So 2 month, right, could end it, and the 3 month could start the new one, right? So 3, 4, so, all right, there we go. All right, you want a new one, so it's on your 5. I bet you at the end of today we will see a new 369 EMA on the 6 month time frame for S&P. I think that could be what happens. I'm going to look out for that today. On the close of and the start of next week, I'm looking for a brand new 369 EMA on the 6 month time frame to start off and maybe get a nice target like we did back in the monthly or the 2 month. Anyway, that's it, man. That's really it. I use the 369. Look, it's such a beautiful EMA, right? You don't have to use it for entries, obviously, but just to gauge where you're at, you know? On your 2-month, on the S&P, you got your Mayo. You got your Mayo, right? 2 hits to your Mayo, you're fine, right? You can come back to your 369, whatever monthly time frame it appears on for your next cycle. Your Mayo on your 6-month currently resides at 899, right? But, the water, the Mayo, 3-month, the water, the Mayo, 369. Those are buying levels for me, as an EMA trader. All right, yo. I'll check y'all later. Peace out.